Good morning, Trace, and welcome to the new trading week. We're coming off the back of what was a pretty quiet affair in terms of event risk last week, but it does heat up a little bit. There's something really in there for everyone, whether you're looking at corporate earnings or whether you're looking at sort of political risks around the shutdown in the US or the potential shutdown. And also more sort of classic data points like the US CPI print coming through. There's certainly something there for everyone. I will say in terms of the trading environment which we're looking at, volatility is obviously something which is really important for traders, just not just in terms of understanding your risk, but also your position sizing. If we have a look at the VIX index, which obviously looks at the implied volatility over the coming 30 days in the S&P, that's currently trading 14.2%, which gives implied move up or down with about a 68% level of confidence in the S&P of about 2% over the week. The Nasdaq VIX trading at 17.9%, which gives you an implied move up or down of about 390 points in the Nasdaq. Obviously, the Nasdaq is super hot at the moment. That's sort of the Magnificent Seven is so resilient. So something we are watching there as well. And FX vols are shot to pieces at the moment. If we look at 1 week realized volatility or 1 week implied volatility, they're very, very low indeed. We've got the JP Morgan FX volatility index at 7%, which is about at the second percentile of the 12-month range. And we go into individual currencies, we can see dollar CNH, which I think is really, really important. That's why we've seen such low volatility. And that's been trading a sort of 734, 726 range. And we can see vols there shot to pieces, as is the case in dollar CAD and also euro dollar, which is going to be really quite interesting to watch going forward this week. I'm watching real rates as well. They have bounced off that 100-day moving average in 10s and 5s, and we're currently trading around 232. If that continues to make a move higher, we're following on what we saw last week, then I think gold, now that we've removed a lot of the geopolitical risk premium out of the market there, could revert back to looking at bond market dynamics much more closely. And gold on the technicals is looking pretty weak at the moment, as is what we're seeing in platinum and some of the other precious metals there as well. Now, if we have a look at the week that will be in terms of data for us to focus on, we go straight into the Federal Reserve or the US data flow. We've got 22 different Fed speakers to play through. Now, I think Austin Goolsbee might be quite interesting. He speaks at 4:45 on the 15th. That comes after the CPI print. So, there's obviously a lot to look out for. In terms of the data, we've got NFIB Small Business Survey. We've got the US CPI print, as you see there. You can see that the expectations are for year-on-year clip of 3.3% headline and 4.1% on core. What I'm looking at really specifically as a playbook is the month-on-month numbers there. I think if you look at the core numbers at 0.3% of expectations, I think if we get anything above 0.35 of 1%, obviously the dollar's going to like that. We're going to see a sell-off in rates. Anything above 0.4, then I think that could maybe make the January meeting a live one. Anything below sort of 0.25, certainly 0.2, and I think the US dollar sells off, and any kind of interest rate pricing comes out for market there. You've got retail sales, the market expecting 0.3% decline month on month. We are looking at the control group element, which feeds more directly into the GDP print. I think that could be quite interesting. But that retail sales numbers at a headline basis expected to be weighed on by new vehicle sales and gasoline sales as well. Of course, we've got claims and PPI numbers throughout the week. Now, if we have a look at rates pricing currently in the market, we can see that really nothing's being priced for that December meeting, about 3 basis points, which gives about 11% chance of a hike. The January meeting's 5.39, so that gives us about 6 basis points cumulative pricing there. So about a 25% chance of a rate hike by that point. But then it sort of comes down, and going to June, and we've got we start opening up for rate cuts playing through. If we go into the China, I think this is another really interesting one. Some of this growth data points to watch. We do get new yuan loans, aggregate financing numbers, and M2 money supply coming through. There's no set time for that. It could come out any day this week. But market's expecting new loans to come right back from around 2.3 trillion down to 655 billion as well. Now, further out to a week, on Wednesday, we get the growth metrics, the high frequency data points, industrial production, expect to be at 4.5%, retail sales, fixed asset investment. Be interesting to see, depending on what happens there, whether the Chinese equity market becomes a little bit more sensitive to that. They have been weighted. They look pretty heavy at the moment, those Chinese equity markets. But, you also want to keep an eye throughout the week. We're going to be getting earnings from Alibaba and Tencent as well, two of the biggest stocks on the market by market cap there. So something we are watching, some of that Chinese exposure. If we have a look at Australia, we do have the wage price index coming through. That could be quite interesting as well. The market is expecting 1.3% quarter on quarter and 3.9% year on year. That's about a 30 basis point increase from the prior read in Q2. And if we have a look at jobs on Thursday as well, the market's expecting a slight tick up in unemployment rates of 3.7%. And the amount of jobs created, about 24,000. Obviously, that's a sort of pluck in the air number, a guesstimate. But we have a look at Aussie rates pricing at the moment. We've got couple of basis points being priced in for December, so no one's really expecting any kind of moves there. We go out to May, where we got sort of terminal pricing there. We've got about 15 basis points of tights there, so some residual pricing coming through into the Aussie curve, and obviously that could get thrown around, and obviously the Aussie dollar by extension if we get that, depending on what happens with the wage price index. In the UK, we're going to be looking at jobs numbers coming through. The jobless the change comes through. And then I think the wage data is going to be quite important. The market's expecting that at 7.7%. And then later in the week, we get CPI numbers coming in at 4.7% expected. And then the core number, which is probably the more important number, expected to drop from 6.1 down to 5.8. We do get retail sales and PPI as well. And we get an absolute ton of Bank of England speakers playing through as well. But if we have a look at UK pricing, no one's really expecting anything. Again, this is another central bank the market's saying is pretty much done. You can see there that we got 1 in 5 chance of a rate hike by February, and of course that CPI number may move that pricing to a live situation if we get a really, really hot number. But again, this is another central bank. We're going into the second half of the year. The market does have rate cuts being priced in there. Not a lot to really focus on in Europe. We've got GDP numbers, but backward looking, obviously, but the market's expecting another weak number. Some of the data in Europe has been pretty woeful of late. We've got the German Constitutional Court ruling playing through again. I'm not expecting that to be a massive driver. But again, you've got European rates pricing, as you can see here, another central bank where not much is being priced in for the next couple of meetings, and then rate cuts being priced in from around June of next year as well. We do get a large amount of ECB speakers playing through again, as you can see here, a whole raft of ECB speakers to play through. So that could be something that moves the dial a little bit going forward in that situation as well. Now, if we have a look at some of the other factors, we obviously are watching the shutdown, potential shutdown coming through this week. It does look like the House Speaker is putting together a sort of a staggered approach to sort of keep government agencies funded through to January, and then a second sort of collection through to February. We'll see if that one gets through and if that becomes any kind of market situation playing through as well. So an interesting week ahead. We are watching real rates. We're keeping an eye firmly on what's happening in interest rate pricing. The NASDAQ, will that continue to outperform? Will gold prices continue to sell off? There's a lot there. Volatility is still very, very low. That's going to be affecting our trading conditions. So a lot to focus on this week. Certainly watching that shutdown. We're watching Chinese data and growth data, and that US CPI number as well.